He's called Rockstar Rajan, or the James Bond of central banking. But the best description came from the man himself. My name is Raghuram Rajan, and I do what I do. Such a pleasure to have with us here RBI Governor Raghuram Rajan. Thanks so much for talking to us.
Thank you.
Your one-liner yesterday was the best quote of the day for all of us journalists. It's been trending on social media. It's been splashed across TV channels and newspapers.
Yeah, well, my wife sent it to my kids. They said, "Yuck, Dad, you can do better."
But it was wonderful. In many ways, it does define the man that you are. RBI Governor Raghuram Rajan, someone who's known to speak his mind. But you were actually responding to a very specific question on whether you're a hawk or a dove, terms that we very often use for central bankers. Do you believe central bankers are very unfairly labeled sometimes, depending on the actions they take, the moves they make?
Well, I think central bankers have shown they can be pragmatic. They have to be pragmatic because we are encountering circumstances and environments that haven't been dealt with in the past. This is not your normal recovery in the global economy. India is going through times which it hasn't seen before. It's a much more integrated economy today than it was 20 years ago. So you have to figure out what's right and do it without necessarily relying on a long tradition, without appealing to ideology. And that's why I think these labels are not very useful. Clearly, there is a time when you want to establish credentials for perhaps fighting inflation. And that's important. Right. And people have to believe you when you say that is your priority. And it continues to be your priority.
Sure.
But then over time, there are other factors which also come in, which you have to take into account. For example, the state of the global economy would suggest that fighting inflation is now perhaps a tad bit easier.
Right,
than it was
and which is why it's important for central bankers also to evolve in many ways and also adjust to the changing times. Your 2 years of governorship has made one thing quite clear. You love springing surprises on everybody, and that's exactly what you seem to have done yesterday. Most people were expecting you to give a 25 basis point rate cut. You went ahead with a much bolder move. You've outlined the reasons why you did that, but can we safely say that in one stroke you have managed to silence all your critics, including the government as well as the industry, who in some ways seem to suggest that the RBI's policies were coming in the way of growth and investment?
Well, I don't know that we've silenced critics, and I don't think that was the aim. I really think what we were looking to was the state of the economy and to see what best we could do in terms of policy at the particular moment, keeping in mind our longer-term objectives of keeping inflation under control. So what we did was responsive to what we thought was the state of the economy. Now, to some extent, the same critics have been there 2 months ago, 4 months ago, 6 months ago.
Right.
The chorus doesn't change, but our actions did change, and that reflects the fact that circumstances were changing. The data that were coming in were more consistent with what we wanted, which is why we moved.
So a lot did change in the last 2 months, and particularly one thing that is causing global headlines is China's slowdown. Do you think in many ways the world had underestimated the impact that China's slowdown can have on the global economy?
I think yes. This is perhaps the third bit of difficulty the world economy is having. First the subprime crisis, then the European crisis.
Right.
And as we felt we had gotten over those, we suddenly have an emerging market. Not so much crisis, but difficulty at this point, of which China is a big part, but don't forget Brazil, don't forget Russia. These are big economies in their own right, and they're not doing very well.
But the saying clearly is, if America sneezes, the rest of the world catches a cold. Can the same can it be said about China now? Do you think China's weight in the global economy in that sense has increased, and the developments over the last few weeks perhaps point to that more than ever before?
Of course, and what people don't realize is that the world economy is interconnected in so many ways. So we think we're not that closely affected by China, and yes, we're not, but we are affected indirectly because the markets that China exports to our markets, we also export to. So we compete in those markets. then the people we export to are people who export to China. So if they can't sell to China, they get hurt and they import less from us. So we are really connected, and that's something to think about.
But talking about China's slowdown, the impact on India, you've of course said that we are relatively insulated, we are better off. But both you, as well as Prime Minister Modi, Finance Minister Arun Jaitley, have gone so far as to talk about an opportunity in this crisis for India. Some have even said that China's pain can actually be India's gain. Is that taking it a bit too far?
That is taking it a bit too far. I think that no country does, does better because some other country does badly. Right. I think we will, on net, be hurt if the Chinese economy slows. We would want China to recover. But there are offsetting benefits to the costs that are imposed by such a slowdown. And one of the benefits is, yes, we do import substantial amounts of commodities, which China was importing. If it imports less of those, prices fall, and therefore our producers have lower input costs. And we've seen that in the last few months, that their margins have increased because the input costs have gone down. So it's not a unmitigated blessing, but there is a silver lining in this. And there's also the opportunity to take advantage of these lower costs, to take essentially a hatchet to all other costs, to become much more efficient. And that's something I think we need to keep emphasizing, that in times of difficulty, corporations have to figure out how to reduce costs, increase productivity. And our corporations are doing that. We need to do more of that.
China's devaluation of its currency, it's something you've talked about. You've in many ways shared the dangers of competitive devaluation, the impact it can have on the global economy. But share with us what's the best way for China to deal with the current crisis. If you were in the position of your Chinese counterpart today, what would you do to come out of this current crisis?
Look, I don't want to give advice to another country, but looking from far and not cognizant of the ground realities there, what they've been trying to do seems to be the right thing. When I was at the International Monetary Fund, that is what we were advising them, to move away from investments and exports towards a consumption-led economy. And that is precisely what they've been doing. Chinese services have been growing substantially. They're moving away from manufacturing. This is a reflection of the fact that their model itself is changing in the right direction.
Right.
But any such change takes time. And what has happened in the meantime is their old models suddenly stopped working because industrial countries started growing very slowly. Sure. So the export-led, investment-led growth model suddenly took a turn for the worse. They tried to compensate through this enormous credit boom, but then now they're suffering the consequences of their credit boom. Change is difficult. And in the process of making that change, you may encounter road bumps. I think that's what's happening right now. End goal is absolutely what is needed, a more consumption-led economy. It's the path there which is proving difficult.
But the fear around currency wars and the developments in the last few weeks, how would you respond to that?
Thus far, China has proved very responsible after that initial devaluation. They have held the renminbi stable. Right. If they had persisted, there would have been much greater fears across the world of a full-fledged currency war. Now, in all this, I think China gets a lot of flack. Let us remember that the devaluation started elsewhere. It's absolutely not in China that it started. It started in the industrial countries. Take the first set of QE programs. They have had some effect on the relative valuation of those currencies, and they continue to have effect. So we tend to overly focus on China when we talk about currency.
And perhaps unfairly criticize China for its actions, because what choice did they have?
Well, they certainly, if they had let their currency move, it may have found an equilibrium where they moved it to. So it's not an unfair devaluation in that sense. But really, I think the point is we must sympathize with the enormous task they've taken on of moving to a more consumption-led economy. It's a long task. It's a hard task.
A long and hard task indeed, but what has been happening in China and the slow global recovery was one of the reasons why the US Federal Reserve decided to hold on to rates 2 weeks ago. You mentioned yesterday that central bankers around the world are divided on whether it was the right decision or not. Which side of the divide are you on?
Well, let me put it this way. Their not moving does create uncertainty around the world. but it also does create more accommodative conditions. Now, I think we are one of the countries that took advantage of the sort of time we got between the taper tantrums and this eventual move to set the economy on a better track. I wouldn't say we're out of the woods, but we are much closer to the edges of the woods than we were. And so in that sense, I think we're much readier for a Federal Reserve move, and for us, the uncertainty would be removed. It would be a good thing.
So the sooner the better.
The sooner the better. For other countries which are in greater difficulty today, I think the Fed move could exacerbate their difficulties. And to the extent, again, that we are one world, it could come back to hit us. Nobody knows what the size of those problems are. And this is really my fundamental problem with the kinds of very aggressive monetary moves we had, which is they've sort of taken us into a ditch. And getting out is very difficult because we know that getting out is very painful, very costly. And that's really the problem. When we went in, we didn't think about the costs of getting out. Now we see the costs can be quite high because of the enormous capital flows that have taken place, the enormous price changes that will take place overnight, whether it's stock prices, bond prices. All those can have effects on people and economy.
Postponing normalization doesn't quite help because it has to happen eventually.
It has to happen eventually, but I think different countries will have different views on when the right time is.
And India is prepared. The confidence that you're exuding right now, in many ways, it's like Raghuram Rajan is telling Janet Yellen, bring it on, I can deal with it.
No, look, this is the language of cowboys. That's not what...
Yeah, but to give the overall picture, India's preparedness is very good compared to...
We're better prepared than we were. I wouldn't say that we know exactly what will happen. These things, when they happen, the ways they work through, given we are an integrated world, can be surprising sometimes. But we certainly are much more confident than we were in July of 2013.
Absolutely. Let's look at the last 2 years. When you took over as the governor 2 years ago, the rupee was in a free fall. Stock markets were in a tizzy. India was ranked among the fragile 5. In 2 years, in many ways, you have managed to stabilize the currency. Inflation is under control, and India is what many people say in a sweet spot right now. It's a good time to also do some stock taking, and for you as the governor, when you look back at your 2 years, what according to you would be your biggest accomplishment?
Well, I think accomplishments are for other people to gauge. What we've embarked on, well, first thing I would say is that we must not forget that in the middle of this May 2014, we had an election, which against all expectations created a stable government. And whether the role of the government before that or the role of the government after that, government is very important in stabilizing the economy and creating the kind of environment we have now. Now, I think that what we're trying to do in India today is really about creating a 21st century economy. Now, people say, wait, we are still a 20th century emerging market, don't go too fast. But, we have the opportunity to leapfrog. Of course, you have to be careful about risks. Of course, you have to build up the human capital. That's very important. You can't throw people trained for a 20th century economy into a 21st century. But if we take the right steps at a steady pace, we can get there, we can leapfrog. And that's what we're trying to do in the financial sector, a whole new array of institutions coming in, institutions that don't exist in other places in the world. Payment banks are a new concept. The small finance banks, versions of that exist elsewhere. But
at least it's part of an entire revolution in the banking space that you in many ways are spearheading.
I think that will happen. And also, I think on the market side, we are slowly increasing the depth, the participation, the flexibility in markets, so that over time we get strong markets, consistent with a first world economy. So we're going there. SEBI is working very hard. RBI is working.
So would you say payment banks would be a real game changer?
I think they'll be a game changer in reaching remote areas of the country. Now, once they sort of bring funds in, give those people transaction services, give them give those customers financial services, then perhaps we can move those people into a modern financial system where our traditional banks will then play a part because they will be making the loans, they will be supporting these customers and some of the other services. So I think the payment banks bridge the last mile, which is very important.
Absolutely. You mentioned the role of governments, and in many ways you've been very upfront in crediting this government for inflation management. We know inflation has been brought under control partly because of efforts of the RBI, because you've managed to hold on to your stance despite pressure from all quarters. We also know global events have led to this trend because commodity prices have collapsed. But do you think this government has done much more in overall management of inflation than, say, some of the previous governments?
I think food management has been extremely good. What we need to do is move from the month-to-month food management, remember, we've had 2 now bad monsoons, hopefully even after this one, and of course we are vigilant, but hopefully prices will stay contained, pulse prices will come down, and vegetable prices will also come down. But that's what we have to wait for. But 2 tough monsoons, and still we've got some moderation in food inflation. I think that's extremely creditable for the government for having managed food production.
Right.
But what we need to do, and this I think is a longer-term goal of the government, is make ourselves more independent of the vagaries of weather, because the vagaries are going to get worse. We need the irrigation programs that the government has, I think, are extremely important here. But also reaching out to the farmer with power, with new technologies. I mean, there's no reason why our small farmers cannot be highly productive. And that, to some extent, is the scope for maybe the third green revolution in this country. Of course, it's being extended into the east, but even within the traditional areas, can we increase yields substantially? Can we move to more, away from traditional grains to new kinds of crops? What people don't realize is how much is now being produced through horticulture, how much is produced through dairy.
Sure.
We've got tremendous advances there, but we need to increase all those.
All that, and that's where the government can play a role.
I think longer-term food management and longer-term investment is what is happening, and we need more of it, and I think that will make us truly independent of the weather.
So the government clearly gets good marks on inflation management, but overall, when we look at the performance of the government, the fact that we need to accelerate the reform process, many analysts and economists yesterday have been saying that now the RBI, with the steep rate cut, has done its bit in many ways. The focus now shifts on the government to really take forward that reform process. Would you agree with that view, that it's now all going to be the way the government can possibly further accelerate the recovery process?
I think that view tends to say the government hasn't been doing anything. It has. There's a lot of work. But the challenges that we have, both at the RBI as well as the government, are substantial. We've inherited some problems over time, or some problems have built up over time. They have to be addressed. For us, there's the legacy of bad loans which have built up in the system. We need to clean it up. For the government, there are the stalled projects, the attempt to get infrastructure investment going. So all this is hard work. It's going on. We need to continue doing it. There are only 24 hours in a day, but it's extremely important we continue on this path. There are grand projects on the way, and I think that's very important to remember. The Delhi-Mumbai Industrial Corridor, the Eastern Freight Corridor, the GST project. If all these can come together in the next 3 to 4 years, I think we have a very good future ahead of us.
Many people who talk about this government, some of the critics have often been saying that yes, the actions are correct, the talk is right, the government is making the right noises, but it's important for the government to walk the talk now, implement some of the initiatives they've been saying, because there's been enough talk, we need to see more action on the ground. Would you share that view of the critics, or what would you say to those who believe that?
People are always impatient, and the youth are particularly impatient, and expectations have built up tremendously over the last year and a half. Things take time to change, but they are happening. For example, on roads, bankers assure me there's a fair amount of activity now on roads and new road building, and that will ramp up. There is hope that railway projects will now come online, and that will increase. But also, we can't all wait for the government. We have to do, and by this, the Prime Minister had a message to the corporate sector when he met corporate chieftains, where I was. And I think that was a very important message, which is business is not risk-free.
Sure.
And you know, I think the broader point is, yes, we sympathize with the constraints you have faced and continue to face, and we'll try and alleviate them. But you can't wait till it's all taken off.
Right.
You have to take a plunge.
Right.
Perhaps with a hope and a prayer, and a prayer. But things are moving in the right direction, and those who move in early will perhaps reap the rewards of risk. I don't want even for a moment to suggest that our business people haven't been striving very hard under adverse circumstances for many years.
Right.
But at this time, it seems quite important that if they move up with their investments,